afternoon, everyone. Thanks, Alvaro, for interesting insights on the political background in the region. I want also to take this opportunity to thank the Geneva Center for Security Policy for inviting me to join this webinar today. And as Siobhan was saying, the topic of my presentation is on the prospects for economic development in the region following the COVID crisis. The departing point would be the latest report by the IMF that forecast a contraction of 5.2% in the region during this year. And although this contraction might seem unprecedented, my view is that we shall focus not only on the reasons behind the contraction that I will cover, but also on the prospects for recovery in 2021. Therefore, the idea today is to focus on the main reasons behind the economic crisis for 2020, focusing on the supply side and demand side reasons. Then I will briefly discuss what has been done so far by governments in the region. And finally, I will cover the reasons why, in my opinion, these economic effects may prove transitory and temporary, and we may see a sharp recovery in 2021. So going to the transmission channels from the supply side, the most important point is related to commodity prices. As you all know, the region is heavily dependent on commodity exports. The fall in commodity prices is well known, specifically in the case of oil, and that will hurt so many economies in the region, particularly Venezuela, Ecuador, Mexico. They are all heavy exporters of oil products. But if we look to other commodities, actually the pattern is very similar. We've seen coal prices coming down by more than 50% this year, or copper, for example, is down more than 25% over the year, as you can see in the chart. And that can heavily negatively impact countries such as Chile, which is the world's largest exporter of copper, or Peru, which is the fifth largest exporter of copper in the world. So that's one point of concern, but within the supply side shocks, there are other concerns. One would be the disruptions in global value chains. This is particularly relevant for countries such as Mexico or Brazil. They rely on intermediate inputs or parts that are coming from China or the US to assemble final products. And obviously this has been suddenly stopped because of quarantines and mobility restrictions and so on. So that's an issue. And in addition to that, there's an increased likelihood of corporate defaults. Basically because most companies in the region are small and medium-sized enterprise, and therefore they are far more vulnerable to these external shocks. Now, having said that, the good news, because there are good news as well, the good news is that the banking system in the region is in good shape. Actually, it's nothing to do with what we saw back in the 2008 crisis. This time, if you look at levels of provisioning, non-performing loans, etc., the overall banking system and commercial banks are in good shape, which means that in this crisis, they are not going to be part of the problem, but part of the solution. And this can help in preventing some of these corporate defaults by increasing liquidity and funding support for these companies. So that's an interesting remark. Going to the transmission channels from the demand side, the most important aspect would be related to trade, international trade. The region heavily depends on trade, as you can see in the slide, and specifically on trade with the two main partners, which are the US and China, as Alvaro was discussing earlier. Therefore, the paralysis in international trade is widely affecting the region. But on top of that, there are other factors that can explain the shocks from the demand side. One would be the drop in remittances. because of the slowdown or the stoppage in economic activity. And the other concern from the demand side would be tourism, which of course is set to fall aggressively over the year, and that has a strong implication for the Caribbean countries. Now, against this scenario, what has been done so far? What's the government's response to this crisis? Well, from the two major areas, which is the monetary policy and the fiscal policy, we've seen important responses already. On the monetary policy front, central banks are cutting interest rates aggressively, as you can see in the chart, and they are also providing support to commercial banks in order to make sure that there's liquidity and lending facilities in the system. On fiscal policy, we've seen important announcements by most of the countries in the region, important fiscal packages, including direct transfers, subsidies, etc. Now, the point is that some of these measures, or most of these measures, may be limited, and there are important implementation challenges. In the case of the monetary policy, the problem is that when you cut interest rates, that can pass through inflation and weaker currencies. And that's a very important issue. Actually, if you see the chart on my left-hand side, currencies in the region were already weakening before the crisis. And the more you reduce interest rate, the more the currency will weaken. So that may prove that the monetary policy is somehow limited and temporary. When we go to fiscal policy, actually there are two major drawbacks to fiscal policy. One would be the fact, as Siobhan was mentioning at the beginning, the fact that there's huge informality in the region. And this basically means that traditional fiscal packages may not be enough. You may not reach the most vulnerable people, and they may lag behind without social assistance. So they need to somehow redesign these fiscal packages, which has been done somehow in several countries. And then the second drawback, or the second limitation for fiscal policy, is related to the huge level of debt in the region, which is an old friend. It's not new, but both private debt and public debt is very important, as you can see in the chart. And this basically means that there's little scope for governments to increase government expenditure, because the debt to GDP ratios are big in most of the countries. So what can we expect for a post-COVID scenario, taking into account all these challenges? Well, in my opinion, as I was saying, as the crisis goes through and we see that the mobility restrictions are reduced and the quarantines are reduced, we can expect an increase in economic activity, obviously, no? And it is quite important to get the idea, or the important takeaway from my presentation, that, according to my opinion, is not the focus on how much the economy is going to contract during this year, but we should rather focus on how fast the economy is going to recover over the next year. And when you look at the recovery after different types of crisis, we find an empirical evidence that after pandemics, the recoveries are much faster than after other types of crises. And that you can see in the right-hand chart, there's a comparison of different crises. One was 9/11, the huge crisis in 2008, and SARS. And the fastest recovery was just after SARS. So that's one good point. Then the other thing is that, as per my intervention and as per what Alvaro was saying earlier, it is clear that the fortune of Latin America is linked to the evolution of China and the US. And we've seen signs of recovery already in China. You can see it in my left-hand chart. There are different indicators of activity in China. They are all recovering, and that may mean, or may signal the fact that a plausible recovery in China and later on in the US can improve the two major shocks in Latin America. And the two major shocks, from all the different factors that I was mentioning, the two major shocks would be commodity prices and international trade. And the more China is recovering and the more the US is recovering, the better we will see this performance in terms of commodity prices and international trade. This is what I think, in my opinion, that may prove that all these effects that we're seeing over 2020 may prove transitory, temporary, and we will see a recovery on economic grounds for next year. On the social aspect, that's a different story, actually. From my perspective, not only from my perspective, and so many international organizations, what we see is that this crisis will exacerbate and will deepen the social unrest. We've seen mass protests well before the crisis in Chile and some other countries, and this will just deepen all this social unrest. We will see an increase in inequalities, unfortunately, due to school closures, social isolation, the fact that there's huge informality in the region, as I was saying earlier, and therefore so many individuals will be without any social protection. So there will be far more social inequalities, unfortunately. Which, from my perspective, is also an opportunity to look for major reforms over the medium to longer term that include an increase in social protection measures, to build better infrastructures, to enhance financial inclusion, which is key, crucial in the area, and also to push the transition towards a low carbon economy, which can be made by associating rescue packages towards the implementation of environmental measures, for instance. So that would be it. That would be my views. I'm happy to respond to as many questions as you may have, and thank you.